Good morning, everybody. Welcome. My name is Nico, and we're going to be looking at some money management today. Um, Yesterday, I showed you guys how to do martingale the correct way. As I said yesterday, I don't really use it, but if you do want to use it, there's a right way and a wrong way to use it. So I explained to you guys the correct way of using martingale, and then also showed you guys how to do a little bit of math, and we can really mitigate the risk of trading just using some proper money management with martingale. Today I'm going to show you guys the money management that I actually use in my trading. Okay, so this is the best way that I found for money management. It allows me relatively quick growth with relatively low risk. So I am not going to be using martingale though. As stated yesterday, I do not like trading with martingale. I like my way better. I feel that I feel that my growth is quicker with less risk than using martingale, if that makes sense. Okay. So I'm going to explain to you guys quickly what I'm doing. We're going to go to a spreadsheet. I'm going to show you guys the spreadsheet that I use to actually trade. And then we're going to look at some, see if we can do some trades and see how it goes. Okay. So, right, I've got my spreadsheet here. So this spreadsheet at the moment is assuming that I have $100 in my account. My percentage of account is 5% that I'm going to use. So I'm going to use $5 to trade with. And this is going to be my starting balance. And then my risk of my starting balance is going to be 25%. That means I'm going to take $5. I'm going to split it into 4, and I'm going to have 4 trades. I have to lose 4 trades before losing my starting balance. My starting balance is only 5% of my account. Okay, so that means my first trade is going to be 125. So I'm going to show you guys quickly an example of why I like this so much. I entered some trades here. These are just examples of what would happen if you actually win every single trade. So after 7 trades that I had, if I win 7 trades in a row, this will not often happen though. We're going to lose some trades, but this is just to show you guys an example of how quickly we can actually grow using this method. So what I do is I'll take my first trade. And remember, I'm only risking $5 of my actual capital. So if I did my 7 trades and I win my 7 trades, I would have had 326% growth of my starting capital, right? So that's $5, 326% on that $5. But that means I made 1630 profit. And if we go back here and I put in a 116.30, shows me I did 16% growth. So only after only 7 trades, I managed 16% growth in this case, but I only risked 5% of my of my capital. So that's a beautiful risk-reward ratio, and I don't stop after 7 trades, right? I'm just using this as an example, how I do this and what the possible returns are. I obviously do a lot more trades during the day, depending on how the market goes. Sometimes you don't get a lot of entries. We discussed this in previous videos, but in general, I'll do like 15 trades throughout the day, maybe 15, 20. So that's the way I do it. The other thing is, suppose I do my first 3 trades and then I lose a trade. Oh, no, I'm going to do a trade here. Okay, so my 4th trade that I'm going to do, my spreadsheet's telling me it should be 2.33. But suppose I lose this trade, right? Then I just want to see what this amount is, 214. Suppose I lose this trade, minus 2.33, because this happens. We lose trades, we don't win all our trades. What I do next is I don't change my trade size to 175. I stay on the last biggest amount that my spreadsheet gave me. So my next trade will also be for 233. Now suppose I win this, we get a payout of 214, but you'll see my trade size is still not the biggest it has been, because before I lost the trade it was 233. So my next trade will also be for 233. And if I win this again, oh no, sorry, 2.14. If I win this again, now my trade size goes up. It's higher than the previous trade that I had, so it's 282. And so my next trade, this is at the time when I change my trading size on the platform, and my next trade will then be for 282. So let me just skip to the platform. We said 282, nope, 2.82. So my next win will be for 259. Right, 259. But again, if I lose it, let's say we do lose the trade, I will stay again on 282, and then we'll win 252 again. Stay on it. Don't change my trade size. Always change it up, never change it down. And then we're still not over. So in general, you'll do 2 trades. After losing a trade, you'll do another two trades on that same trade size before moving it up again. So we'll see we won one. We had a win, but our trade size did not surpass the 282 of my previous highest amount. So I'll stay on the 282, and again, and only here will I now again move my trade size up 1. Okay, so essentially what this means is that I can get really nice and fast growth while risking only a small percentage of my capital. And as a general rule of thumb, if I lose my starting balance, so let's say I lose 4 trades in a row and I lost my $5, then I would stop trading for the day, because it means I'm having a bad day, my strategies aren't performing well, and this way I stay out of a bad market while only risking a very small amount of my capital. Right, so I know a lot of people actually will take their capital and they'll do 5% trades of their actual capital size, and they'll just keep going. But this way is a lot less risky for me. So it's the perfect balance between martingale and just staying on one trade size. It's somewhere in between of those, but whereas martingale will allow me, if I had $100, I would have to risk 10% of my account minimum, because you can't really do a 3-step martingale trade with less than $10. But this way, I can use a small amount. The minimum amount I can use for this is $4, because I can split $4 4 ways. It'll be 1, 1, 1, 1, obviously. Right, so you can use a small percentage. Alternatively, you don't have to use 25%. You can use, let's say, 20%. Now I will have my starting balance again, which is $5, but now I'll have 5 chances, 5 trades before I wipe that starting balance, right? So before I lose the $5, which is only 5% of my account. But I like the 25. My strategies are good enough to handle the 25%. So that's, for me, that's my sweet spot. Like I said, take 5% of my account, and that's my starting balance for the day. Of that amount, I do 25% of that amount the whole time, and we just never. I keep going, and I never change my trade size lower. I just, every time my spreadsheet goes higher than my platform amount, I will change the amount on my platform, but I never change the amount for the platform downwards. So this is the money management that I use when I'm trading options. Okay, so let's make that 0. Let's go to that sheet. So I'm going to be trading on this, and I'm going to be filling in the trades as we go along. Hopefully it's we're going to get a few entries in this video. That would be awesome. we're 10 minutes into this video, so that leaves us with 40-50 minutes that we can hunt for entries. So let's go to the platform and see 1 point, what did I say, 1.25, right? Yeah. So let's go to the platform and see if we can get some decent entries, and we'll try to stick to the money management. This actually looks like we might get a sell here. Maybe. Or not. We're like 50 at the moment. Oh no, we're 27 minutes into the UK Open, so the opening shakes is over. Market should start flowing nicely now. There's no data coming out. There's some data in 2 hours, but it's very low level impact. I seriously doubt that it's actually going to move the market. So we should have some relatively nice movement for the rest of the video. So remember, guys, we're going to be using our 3 core strategies. On my chart here, I've got the 3 moving averages. It's a 50, a 100, and a 200. I've got my ADX, stochastic oscillator, and RSI. These are all set to default values. Also, this was it this week? Last week we added the Bollinger Bands to find some new entries for us, and we discussed how we can use the Bollinger Bands to find areas where we can actually get some entries from our strategies. We looked at that. So that's what we have on the platform. My Bollinger settings are 14 and 2. And yeah, we're looking for divergence while we're trading. So we're looking for all 4 kinds of divergence, the 2 normal ones or regular divergences, and the 2 hidden ones. We're going to be using the ADX to find DI spikes where we have a big DI plus or DI minus spike, while the ADX is very low, while the ADX remains low. And these spikes occur either way outside the Bollinger Bands, or we're going to see if they occur maybe on one of our moving averages and get rejected. And the third strategy we're going to be using is when price goes into an established trend, we're going to be looking for corrections in that trend. And when those corrections happen, we're going to see if the RSI gets rejected off the middle line, while at the same time we have price on or very close to one of our moving averages. It will usually be the 50 moving average, but it does happen on the other ones as well. So that's the 3 strategies we're going to be using. Alternatively, if we do find a Bollinger squeeze, we can have a look at trading that. And but the 3 core, we're mainly going to be using the 3 core strategies for the rest of the session. So now we're just going to wait and see if we find some entries. We're not going to rush. We're not going to force trades. We're not going to take trades that fall outside of the entry parameters of our strategies. We're just going to sit patiently and wait for the market to give us decent entries that we can then take and trade. Okay, guys, remember, if you have any questions on the videos that I'm doing, if there's something I discussed or something I explained that you don't quite understand, please leave a comment in the video, ask the question. I'll answer the questions in upcoming videos as clearly as I could. If I cannot answer you just in the comments, sometimes it's just a simple answer, but if I cannot and it's something I need to explain, I will definitely just cover it in a next video. But I think by now, if you've been following the past 3 weeks videos, you should have a fairly decent understanding of the strategies we use. You should understand how often and we trade, meaning sometimes we wait 20 or 30 minutes for a decent entry on some slow days. Other days it's faster. Our average trade speed at the is roughly a trade every 10 minutes on the 10-second chart. So yes, we And this is the reason I made these videos. A lot of people just simply doesn't understand that it's a battle of patience. People feel that they're watching the charts, but they're not getting an entry for 5 minutes or 10 minutes and they're doing something wrong. So they make one of two mistakes. Either they start forcing entries because they feel they have to trade, which is wrong. Not trading is also part of trading. So they either do that, or what another mistake people make is they just start messing with their strategies. Start tuning the strategies so they start getting more entries. And then tomorrow they experience the same thing and they again tinker with their strategies the day after that. And this just keeps going in a cycle that never ends. Whereas we did have 1 or 2 days in the past 3 weeks where we got 1 or 2 entries through the course of an hour. And instead of forcing our trades, we simply didn't take any trades, and we just kept waiting to see if the market gives us something. Right, so got the ATX coming up very nicely there. We did have very tight but very sloppy divergence, normal bearish divergence. I do not like playing it like this. I suspect we're going to see a correction soon, so we should see some downside, maybe. And if this happens and I get the and my RSI comes down to the middle line and we do not break through here, I would actually consider taking a buy trade. Taking a sell right this moment is a bit dodgy for me. Because we didn't have clear movement on the stochastic here, right? So clear movement would be this. This is nice. This is a really nice movement. When your oscillator is moving like this is the ideal areas to look for divergent setups. So this is, although technically divergence, it's very, very sloppy, very, very tight. So I have no problem. If a setup doesn't look right to me, I've got no problem just leaving the trade and simply waiting for the next entry. There is no reason to take bad trades or setups that doesn't look good. We get a lot of entries during the day, so there's no need to rush. The most important thing is getting the win rate right. So if you maintain a decent win rate, everything else will follow. But the most important thing, in my opinion, is maintaining a proper win rate. If the win rate's not there, it doesn't matter how many trades you take, you're gonna be moving backwards. You're gonna lose capital, and you're gonna start overtrading. As you overtrade, things go more wrong, and you're gonna get emotional about it, and you're gonna try and get your money back that you've lost, and next minute you see half your capital's gone. You start taking bigger risks just to hope you regain. And all of this comes from simply not waiting for entries from your strategy. That's the only thing that causes this. There's no need to overtrade. There's no need to force entries. We're going to wait for good setups, and we're going to keep our win rate high. If your win rate is decent, doesn't matter if you do 5 trades. I will much rather do 5 trades and win 4 of them than do 20 trades and win maybe 12 of those. It's going to be more profitable for me to trade less but more accurately. And that's, you guys can do the math on that. You can go do the math on it and see, higher volume, lower win rate versus lower volume, higher win rate. It's always more profitable, and there's just no reason to force trades and to do silly things while you're trading. Remember, you've got 2 jobs as a trader, and only two jobs. Your first job is to protect your capital. Second job is to grow it. Right, so that's your 2 jobs, and protect your capital is number 1. You cannot trade without capital. Um, I have seen quite a few people that just keeps on putting money into their trade accounts, but they refuse to. Uh, they put it in, and they're just gambling. If you blow an account in half an hour, you're gambling because your money management is wrong. You're not sticking to a strategy. It's just, you might as well just flip a coin every minute, flip a coin, and heads you call, tails you put, and then go for that. You might as well do that if you're going to be over trading, taking a trade every 2 or 3 minutes. It's not sustainable. There is no strategy. Nobody's actually been ever able to give me a strategy that gives you that trade frequency. And the strategies that I've seen that people use is 50-50 at best. It's really close to 50-50, right? Which is not profitable. There's a lot of people that will argue with me on this, and please give me the comments are there. Explain your strategy to me. If you're taking a trade every 2 or 3 minutes, off a 1 minute chart or off a 16-second chart, and we'll make a video on it and we'll see how it goes. It doesn't exist as far as I'm concerned. The only successful high frequency trading is the guys that use algorithms that takes hundreds or thousands of trades a minute. We as retail traders cannot do that. We don't have access to that technology. We don't have access to the exchanges in that way. So those machines are extremely powerful, with software designed by some of the smartest minds on this planet. Us retail traders do not have access to something like that. So although high frequency trading does exist, it's all done automatically. It's too quick for a human being. Us retail traders have to use what we have, and we have to use what we have, meaning that we have to develop and trade with strategies that's focused on accuracy instead of volume. If you're doing 1,000 trades a day, you can get away with you can be profitable with a low win rate, but we can't do that mathematically, right? It's not possible for a human to mathematically do 1,000 trades a day, or 2,000, or 5,000, or 10,000, because we cannot really do the math in our heads. I'm pretty sure there's exceptions, but that's like one in every 100 million people, maybe. Point being, take it slow. We have good strategies. We've been trading profitably for the past few weeks. The strategies that we have been using has given us decent win rates if we're patient and if we stay within the parameters of those strategies. So yeah, I've actually been blabbering now for a bit on actually something that's fairly relevant. Okay, it looks like we're not getting a lot of entries though. Not even worth the risk. We don't have a decent DI spike here. ADX is way more than even half of the value. I suspect it might go up a bit here, but this is not within the parameters of our strategies or of our entries. So this is not a trade I can take. Wasn't a decent DI spike. We didn't have divergence. Clearly, it's nowhere. RSI is nowhere near the middle line. So we gotta wait. Let's see if we can get some trades. We might get a sell trade here though. Maybe. Let's see what this RSI does. Although taking sells now is a little bit risky. We had price coming through the support. Remember, we used the moving averages as dynamic support and resistance areas. So price did come through the support. This is like kind of like a retest. I suspect we're going to see some upwards movement. The only sell I would consider is if we get some decent hidden divergence, hidden bearish divergence. But at the moment, I do have to consider that price is moving upwards slowly. My auto scroll on, yes it is. So price is moving upwards slowly. I will much rather look for a valid buy opportunity than at the moment than sells. The only thing I will take without a doubt is hidden divergence. It did not form here, so it's not something we're going to trade now. But this does look like we're going to be heading upward. If you guys noticed over the past few weeks, most of the trades we did occurred, almost none of the trades we did occurred within the moving averages, the way price is moving at this moment. Right, so price is stuck between moving averages. Our strategies mostly give us entries when price is moving outside of all three the moving averages. Now that's something you can keep an eye on. We'll get entries here, but we very seldom get entries in these areas here where price just keeps going up and down, keeps breaking the moving averages like this. We very, very seldom will get entries in these areas. We do occasionally get them, but very, very seldom. Most of our trades will occur outside the moving averages. Remember, we've got basically we've got two continuation signals. We've got the hidden divergence and we got the RSI bounce off the middle line. So those are both continuation signals. And then we have two reversal signals. We've got the normal divergence and we've got the DI spikes that we use on the ADX, right? So we've got three strategies, and between those three strategies, we're getting two kinds of reversal signals and we're getting two kinds of continuation signals. So continuation usually occurs inside a trend. If you remember, again, first condition for the RSI strategy is that the price needs to be in an established trend. So if price is in an established trend, it will almost always be outside of all three of the moving averages we have on our chart. Same goes for reversals. If we are in a trend and we get normal or regular divergence, that signals a reversal for us. Short term or long term, we don't know, but it does tell us that in the immediate future, price should continue making a correction instead of continuing with the trend. And then also the DI spikes will usually occur outside of all three moving averages. So that's something to keep an eye on. I did speak a lot these past 3 weeks of trying to identify areas where I might get entries from my strategies before price actually gives me an entry, right? So we're not predicting the market. I'm not trying to predict price movement. As I said, that's impossible. We cannot predict what price will do, but there's certain things that tend to happen. We know that if we break a decent support line, what often happens is that price will break through and then come back to retest that area, and that retest is a correction in a downwards move and might give me an entry on my RSI strategy, for example, or I know that I need to keep an eye out for maybe hidden divergence. So trying to identify areas where you are likely to get trade entries is fine, as long as we stay within the parameters of our strategies. right? So we're not gonna predict the movement. We're not gonna take any trades ever based on what we think price will do. We're only gonna take entries based on what our strategies tell us. Man, this is a slow day though. This is turning into a slow day. We're 30 minutes in and we haven't gotten an entry in 20 minutes. Because the sheet took 10 minutes and we've been looking at the charts for 20 now and we didn't get an entry. But it's also kind of a good thing. Because from time to time it's important to see that sometimes we just sit and watch. And if you don't have the discipline to sit and watch and wait for your entries, walk away, go do something else for an hour or 2 hours, come back and see if the market conditions has changed. And this goes for, if you're trading OTC, I know there's a lot of people that trade OTC because maybe they've only got time on weekends, or maybe by the time they get home in the evenings and by the time the kids are put to bed and everything's calmed down, the normal markets have closed and brokers only offer OTC charts. So, you know, I know there's people that trade OTC, but the same rules apply. Always. If the chart isn't giving you entries, there's not much we can do about that. And there will be days when the charts aren't giving you entries. I think if I remember correctly, for over the past 3 weeks, this being the 4th week, we had one such day every week, I think. One day every week where we just simply didn't get entries. I think if I remember correctly, the first 2 weeks was on Thursdays. Both were on Thursday in the first 2 weeks. Where was it? Last week wasn't Thursday. Last week was a different day where we simply didn't get entries. Can't remember. Does this mean I'm not trading on Thursdays anymore? Absolutely not. Because the next Thursday might be one of the best Thursdays, best days I'll have this year. Never know. I've seen so many people swear high and low, you can't trade on a Monday because they got burned on a Monday, or you can't trade on a Friday because they got burned on a Friday. I've seen people say you can't trade on Wednesdays because it's the middle of the week, but it's because they got burned on a Wednesday. And if we listen to everybody that tells us we can't trade on this day and this day and this day, you will not be able to trade any day of the week. It's a ridiculous concept. What's happening now is where the problem comes in. This is the reason people think that you can't trade on certain days. Because we're having a slow day and people start forcing their trades. They start looking for trades. They don't have the patience to sit and wait. And they start forcing trades and things go wrong. Whenever you're going to start forcing trades, you're going to have a bad day. And then a lot of people will just say, no. This happened to me on a Tuesday. You can't trade Tuesdays. Market is bad on Tuesdays. No, it's not. It's bad on every day, but it's not bad every day. We've had a really good 3 weeks so far, almost 3.5 weeks. Trading has been good. Is this going to be a buy for us? We do look like we've got some hidden divergence setting up. It's valid. Is the RSI rejecting? I got a suspicion though it's going to come down to this. Let's just see. The RSI is rejecting, but we do have hidden divergence forming. I'm going to wait for the divergence to form. Okay, because we are very close to the moving average, and I do think we're going to see a little bit more downwards move. But as long as we don't clear, let me just draw this in, hopefully not miss a trade while I'm doing that. As long as price doesn't go below this value here, we're good. If the stochastic turns upwards, this will be a buy for me. Just gotta wait for it. Just gotta wait for it. Okay, because for all I know, this is valid divergence as price is now. But I don't have an entry yet because my stochastic is still heading down. So for all I know, price could just make like 3, 5, or 10 red candles from here. I don't know what's gonna happen. And I only trade my strategies. That's why we wait for the divergence to finish forming. And once it's formed, I'll trade it. So as long as price doesn't go through this green line here, and there we go. Okay, and this is the reason we don't jump the gun, because this happens as well. It did look like a very nice divergence setup was building, and if I jumped the gun, if I got in too early before I actually got the signal, before it finished setting up, I would have been in a losing trade right now. And this is where the self-control comes in. You're waiting now for, I mean, it's been 25 minutes. We're waiting for 25 minutes, and now you're getting something that looks like it's going to be a good setup. And this is where you need to have that extra self-control to not take the trade until your setup is complete. What's happening here? Is my internet, did my internet cut out? Why is my chart standing still? Yeah, man, I need to get a new ISP. I really need to get a new ISP. But anyway, yeah, so it's important to keep that self-control, and if you don't have it, it's fine. Just go do something else. A lot of people won't have that self-control to sit and wait for the entries when then, especially in periods where they're not getting any entries, where the market's slow, and that's 100% fine. We're going to get some, looks like we're going to get some bullish divergence here. Maybe I would have liked price to come down just a little bit more. So this stochastic is a valid setup for bullish divergence. Would have been so awesome if price actually did come lower first before it started turning up, which it still might. But this looks like this is a decent bullish divergence setup if we could just get that little red candle and then the turn. That's a trade I will take as well. Man, this is turning into a 40-minute video where only the first 10 minutes was actually valuable. My internet's starting to mess around now, which is also a problem. We did get the bullish divergence setup, very faint, but it's there on the stochastic. We did make a new low, but my internet messed me around now. I get these times during the day where my traffic just stops for anything from a few seconds to a few minutes, and it's just dead, and then it continues. I know it's not the platform because it doesn't matter what I'm doing online, everything dies. So it's really frustrating. It really is frustrating, and it happens quite regularly. But yeah, okay. So guys, this video is like 40 minutes long by now. Even if I do get 1 or 2 trade setups right now, it's not gonna be enough for us to really have a look at the spreadsheet. And the fact that my internet is now starting to give me some issues. I think this is where we're gonna end today's video. Important takeaway from this is the money management I explained earlier. This is how I trade. I use a percentage of my capital, and then I trade very aggressive with that small percentage. But so I'm risking, like we explained in the spreadsheet earlier, only risking 5% of my capital, with the possibility just after 7 trades, depending on the payout, right? I calculated the spreadsheet on 92% because on pocket option it's 92% on euro most of the time. So, you know, that's what that's the payouts I trade with usually. But even if your payouts are a bit lower, you're still going to do after after 7 trades, in the same span where I did 16% on my total capital with risking only 5%, you'll still do 10 plus at least. If you're on 80 or 85, you're still going to do over 10% growth while risking only 5%. And that's just 7 trades. If you sit for a couple of hours and especially if you're having a good day where you're getting a lot of entries, that's going to turn into something phenomenal. I've had days where I did 30-40% growth on my total capital using this method, risking only 5% of my capital, but then you get like 20-30 trades during the day, and it's awesome. So some days, not like today, it's turning into a very slow day for me anyway. I'm sure there's just incidentally, this is one of the reasons chats in trading is dangerous. My strategies are not giving me entries today. Okay, it's very slow. We're not getting a lot of entries, and I don't like jumping between assets because it breaks my focus. I like to trade just Euro USD. But what happens is other strategies might be having good days. So often people will be in chats and they're not getting entries, but they see other people trading. They see other people trading, but they're trading different strategies. And now you're feeling, shit, I'm doing something wrong. I'm doing something wrong. I need to be trading. Everybody's trading. Why am I not trading? But they're using different strategies, right? And you don't even, half of those strategies probably doesn't even perform well. These guys are just trading for trading's sake. So if you're having a slow day like we have today, and you are part of some chat or some forum or whatever where you are actually communicating with people, if they are getting entries, don't think you're doing something wrong. Stick to your strategy. There will be slow days for you. Other days it will be reversed and people will see that you are taking trades, but they're not getting entries because their strategies are performing poorly for that day. And then they're going to make that mistake probably. A lot of people do that because they see people are trading, especially if you're in live chats where things are going quickly and you're participating. People see that you are getting entries and they start forcing their trades. Chats in general is a bad idea. I stay out of them for the most part. So, yeah. But I think this is where we're going to cut today's video. We didn't get any trades yet, which is unfortunate. But these days, this is part of trading. This is, there's no way we can get around this. You will have days like these. I am definitely going to stop trading now for at least an hour or hour, probably 2. I'm going to go to town, get some chores done. This is the time that I do this. And I'll come back later and see if the conditions have changed. I'll sit in front of the charts again. And if they have not changed, I'm taking the day off. I'm not taking the day off. I'll just do something else for the rest of the day. I'll continue trading tomorrow. It's as simple as that. Because there are days like this. There are days where the market is not, or the charts isn't giving us entries for our strategies. So please be careful. Know that these days exist. Do not force your trades. It will always end badly. If you go outside of your strategy, it will always go badly. You're more than welcome, though, to sit and watch the charts. I don't have the patience for that. I do not have the patience because we're on 34 minutes now looking for entries and I'm not getting entries. I do not have I get frustrated. When I get frustrated, I make bad decisions. So to avoid that, I just go do something else. I would not have been sitting here for 34 minutes. I would have already been doing something else because if I don't get an entry in 20 minutes, I know it's a slow day. It's at least a slow period, and I'll come back in an hour or 2. So, but we did do the video now. I can't cut the video and continue later. That's not ideal. But yeah, like I said, I think this is the 3rd day in 3.5 weeks that we had a slow day like this. They do happen. They don't happen often, but they do happen. And these are the days you need to be really, really extra cautious. Stop trading. Okay, guys, thanks for watching. Again, if you have any comments, or any questions, leave it in the comments below, please. I will get back to them. I do read them. Also, if you guys want to give a pocket option a go, I'm going to leave a link in the description for that as well. Head over to their site, give them a go, see how it is. I switched to them recently, well, not recently, a while ago, because I don't have delays on my trades. That's the major, that was the major selling point for me. My trade executions are instant. And the fact that the expiry, whatever I make my expiry is from the time I actually take the trade. So I always do 1 minute trades. Doesn't matter what time I took it, where on the chart I take my one minute trade, it'll always, from the time I take it, it's 1 minute. It's never a 30-second trade. It's never a 90-second trade. It's always a 1 minute trade, which is, in my opinion, a bit better. But the big thing for me was, again, delay in entries. We cannot trade on a 10-second chart, even a 1 minute chart. If there's fast movement, you cannot have delays on entries. It will cost you, it will bring your win rate down a lot. So yeah, if you guys want to test them out, go do that. Right, guys, I'll be back tomorrow. Tomorrow let's not make any promises for tomorrow. I'll see you guys tomorrow. Hope you all have a lovely day. As always, trade smart and trade safe. And yeah, I'll see you guys tomorrow. Cheers.